the International Energy Agency's Executive Director, Fatih Birol himself, is here on the channel right now. Mr. Birol, thank you so much for joining us. Absolute pleasure to have you on the channel. Talk to us about what's the current most important dynamic which is playing out in the oil market. We are looking at sluggish trend with a downward bias. What are your observations?
When we look at the oil markets today, we see two important trends that could have an impact on the current oil markets and an important heads up. What are those two important trends? First of all, global oil demand increases, but increases slower than the previous years, mainly as a result of the global economy is slowing down. China, advanced economies, when we look at the economic growth prospects, they are much softer than previous years. And as a result of that, we expect this year global oil demand grows about 1 million barrels per day, maybe slightly higher than that, and much lower than previous years. Second trend, which is also very important, a lot of oil production is coming to markets from United States, from Iraq, from Brazil, and elsewhere. So when we put these two things together, there is a lot of oil in the markets, which altogether will put a downward pressure on the prices, I think, which is a good news for oil importers such as India. But in addition to those, there is one factor, a disturbance factor. International Energy Agency is an organization which looks after on oil security issues. And what is happening in the last few weeks around Strait of Hormuz is a major concern for us, because Strait of Hormuz is a very important strategic strait, as about 20 million barrels per day of oil is flowing there, and it's about 1/3 of the international oil trade. The same natural gas, LNG, there's a major flow of LNG, about again 1/3 of the global LNG trade goes through Strait of Hormuz. When it comes to India, India is one of those countries which will be mostly affected if there's a supply disruption.
Mr. Birol, despite Iran and Venezuela sanctions, OPEC output cut, the oil market has still been in surplus, at least in the first half of the year. Is US really pumping out that much oil, or is the weak demand scenario which is impacting the space?
So we have seen in the last few years, especially in the recent months, oil and geopolitics are more and more interwoven. And when you look at the recent developments with Iran sanctions, what is happening in Venezuela, a big decline of oil production, a major oil exporter, what is happening in Libya and other countries, normally one would have expected, when we compare several years ago, big spike of oil prices. Why it didn't happen? Simply because huge amount of oil, shale oil from United States, came to the markets. Last year, a big growth of US oil production, more than 2 million barrels per day, exactly 2.2 million barrels per day of oil came to the markets, and this covered all the major cuts in the oil markets from these countries I mentioned to you. Last year's growth from United States was the highest growth in 1 year from any single country in the history of oil. And this year we expect again an increase from United States, about 1.8 million barrels per day, but from other countries as well. And if you put all of them together with the rather weaker oil demand growth, I can comfortably tell you that we don't expect a major price increase unless such unexpected geopolitical events take place.
Mr. Birol, you kept your demand estimate put at 1.1 million barrels per day after downgrading it earlier. What is the risk to this figure which you are looking at?
We expect this year's oil demand growth slower than previous years, mainly as a result of the slowing down of economic growth. China, the engine of the global economy, this year we expect the Chinese economy will grow the slowest in the last 3 decades, but also some of the advanced economies as well. So we may well revisit our numbers if the economic performance of these countries are poorer than we assume today. But of course, we would be also happily surprised if the economic growth is much stronger than our numbers. It will be a positive surprise, which I don't expect to happen much, but we may again revise our numbers upwards. But I would say the main risk is a downward revision as a result of the economic growth prospects in major economies in the world.
Mr. Birol, a recent IEA report says that while OPEC output cut extension removes a major uncertainty, it does change the fundamental outlook of the oversupplied market. Do you think cuts should have been much more deeper in that case?
Yes, the OPEC countries, Russia, are of course discussing this issue among themselves, and what they are going to decide, how they are going to move is important for the markets. But I should remind you that whatever is decided in Vienna by those countries are important, but there is also a response that could come from Texas. We shouldn't only look at what's to understand the oil markets to Vienna, but we should also look at the Texas, what will happen there, because there is a huge amount of oil that could come from the United States, which could have serious implications for the markets as well. For the OPEC producers as well, I think nobody wants higher prices than we have now, as it is not a good news for the already fragile global economic prospects. And we as the IEA do not want also oil prices to go to very low levels, $20, $30, as we need investments, new investments in the oil production for the next years to come.